Hey guys, wanted to put together another video covering options specifically. So if you're not an option trader, then you can skip this video. So I want to talk specifically entry, exits, moving my stop losses, rolling profits into other strikes. Talk last video about math and so understand your delta and your premiums and those relationships, and then some other key takeaways that I've been preaching. Just want to hit that home. So we're going to look specifically at NVIDIA stock. I made this call this morning. Right here on the right side, I have the actual chart. Stopped about 10 o'clock. I think we made this call at 10:30. I got stopped out on this. I made a back call, and this is lesson learned. So we're going to learn from mistakes moving forward, so we can jump into this maybe a little earlier and make some money tomorrow. So this is the actual chart for NVIDIA. And on the left side of the screen, you have the options chart for NVIDIA. So I like to have both of these pulled up when I'm trading. One, I could see where the price action is for the options, and then two, where I can watch NVIDIA. So kind of a quick overview. Obviously, you have your chart from the pre-market. All this in the gray area to the left is your pre-market. This here is the split. So after 8 p.m., it kind of cuts off and it jumps up. So 8 p.m. here, and then right over to 4 a.m. when the market opens back up for pre-market. So as you're looking at this, you can see it's an uptrend. So anticipating the market, at least for NVIDIA, to be moving up. Again, very bullish with this particular stock. As we're looking at NVIDIA stock on the 5-minute chart, this thing is moving pretty sideways, pretty much all pre-market. So as it's moving sideways, here's your RSI, it's moving down, right? And at pre-market, get a little indicator on a buy ticker. I'm also looking down here at your MACD. The downward momentum is starting to die off, which is this darker shaded red. So that's kind of what I'm looking at. So when we pull up our options chart, we look at a few things. I mentioned in the last video is your premiums, which are your bid and ask spreads here, and then the deltas, which is basically what you expect to make on a dollar change in the underlying stock. So as the stock moves up, your expected profit is going to be $38 for every dollar move. So this is to 11.75. You're going to make $38, give or take. I posted this on the chat. I pinned it. So if you want to look at it, this is the definitions for the deltas. So there's a couple big ones. Delta being the big one here. Gamma, theta, vega, and rho. We're not really as interested in it. It's really this one and your delta. So delta, like I said before, the amount of the option price expected to move based on a dollar change. So if NVIDIA moved up $1, this is how much you'd expect to make. So understanding these are pretty important. Able to do a little quick math here. You can see that the degree of premium between the 212 and the 215 is pretty significant. You're paying almost $90 here for $40, and here you're paying $30 for $20. So if you were to get two of these calls, it would cost you $60. And if this moved to 211, your expected profit is exactly the same delta. So you're paying less, and you're making the same. So essentially, you can buy 3 of these to equal this one and get $60 essentially on your profit. So understand quick math and understand like the 215 would have been a good call. It says obviously the end of the market. So these change quite a bit as the stock adjusts throughout the day. So as we move over here to the chart, things I'm looking at. where the buyers were the sellers, right? And you can kind of see where the buyers step in, keeping the stock above that 210 range, and sellers are coming in and keeping it below that 211. So it looks like it's trading flat. There's a couple indicators here that show me there's some upward momentum. The RSI being low, which is basically you're oversold or overbought. If it's lower than this 30 range, then it's oversold, so it's sold off too much, and you can expect some jumps. This good spike, this is a good key to look for, which prompted this alert. The other thing is the shifted momentum. So we know that stock price is moving up. We know that momentum for the selling off is dying down. So we're literally just looking at what I like to look at is the moving averages. So we could have made a call somewhere in here. This option that I was looking at specifically is the 215 call. So this is what I'm going to look at. So 215 call, sitting around 51 cents, 52 cents. I would have said, hey, if NVIDIA breaks over some weak resistance, being this 9 EMA, which is your exponential moving average, if it breaks over there and holds, we're likely to look up. So we'll go ahead and fast forward 5 minutes. 5 minutes. Just a little bit of a jump right there. You can see that's a pretty positive movement upwards. I was pretty excited about this. This would have been a good trade to get into. Obviously, you want some confirmation. Obviously, as this is moving in this 5 minute period, you can see that it's starting to break over. So maybe we would have looked to enter as it broke some of the seller's resistance here. So maybe that 211.06. So as we look in the options chart, we're looking at maybe entering at a 65. So when you put in your premium, you could put a limit buy at 65, 64 cents. And as soon as it tripped over, you would have got in 65 cents. So obviously that's going to keep running up. So the next 5 minutes, this keeps running up. So I think I said I wanted to alerted you guys here on this flag. So this is a pretty good bullish flag. So when you got a nice movement up, a little bit of a confirmation pullback, and the buyers come back, this is even though it's red, it's still a bullish signal to look at. So just fast forward it here. So we know that if we had entered down here that basically that $65 range, that's 66, 65, all the way up. There's $30 right there, per contract. And as we looked before, those premiums were pretty cheap. So I want to say I alerted you guys up at the top. I was just looking for a little bit of a pullback and a movement up. So as you set your entry and then your stop loss, what I look at is for stop loss, hey, I want to enter here. I'm willing to take a $15 hit if it breaks below this, but I want to give it some room because these wicks here will trip your stop loss. You want to be careful with these guys right here. So if you set your stop loss down on this candle right here at that 5.3, that would have wicked out because it went all the way down to the 4.8. So understand where your levels of consolidation are, and those are basically your tiers to move them up. So as you buy at 65, then maybe here at the 72, as this pushed up to 98, you would have pushed your stop loss. You just sort of taken it and said limit sell here at the 68, guarantee at least $3 profit. So we'll keep moving forward. You can see that momentum is shifting up. Your RSI had pushed up over that 50 mark, and we'll keep watching it. So hey, this is good. Like I said before, you got a nice little pullback. Caught that 9 moving average and started to roll back up in that 211, 212 area. So we'll roll over. Probably rolled over a little too far, but give you a little idea how that went. So as you move your stop loss up, I would have kept pushing it up. And as the price consolidated a little bit, this is where I get a little bit more aggressive with my stop loss. I start moving my stop loss up, 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 up. And if it trips out, that's fine because that's $10 right there for me. And I can always get back in. So there it is. It drops pretty good. That would have tripped my stop loss, and I've been out, around the 85 mark, making $10. So understanding like your entry is important. Obviously, we entered down in here. We got stopped out and we lost money on this call. Particularly, I just was late to the call, and you guys felt that one. So that's on me. But for future go at it, this is good bullish momentum here. If you don't have these indicators, I would highly recommend that you throw those on there. So I got the 9, 26, 50, and then the 200. These are all very popular moving averages. A lot of folks play. And then you have the RSI and then the MACD. So we can keep going through this. I want to say that NVIDIA caught itself on the 50. Again, if you're slow to the punch, instead of that FOMO, because said, oh, this is great, this is a good solid movement up, you're never going to outpace the market. So just wait for a pullback. It tends to pull back into the 2650 EMA, and you can get in here around 1055 when the stock price is moving back up in that 211, showing some good movement back. We'll move over here. So if you get back in, if you played it right, you got $10 here. You actually stay in the same strike because the strike premiums and the delta look pretty good. So back in, hey, I'm going to enter back in here at this 62, and then I'm going to set my stop loss down here at 51, just underneath where I think resistance is. So I'm willing to make that $11 loss. So as the stock starts to move back up, I want to also shift my stop loss. Pretend this ain't here. I'm going to shift my stop loss up to break even at least. So as it's moving up, I'm shifting my stop loss up just underneath where I think the wick might hit it. So you're taking a little bit of profit, and you're keeping your risk pretty low. Now, obviously, you can plan to play this a little bit longer, an all-day trade if you think it's pretty bullish looking at the charts. And with the market being so volatile, I like to play a little closer. Otherwise, you would have, got in here at 65 and you're still in. This thing continues to go up. So the importance of playing these little ebb and flows, playing a tight stop loss. So that's just kind of the idea with how you play this trade here. Obviously, we got in a little bit late up here, but we definitely could have waited for confirmation and another movement back up. So typically, this is very, very typical. This upwards momentum, a little bit of a pullback, and then shoots right up. So high of day 213, definitely could have taken advantage of that, where you got nice little pullback, got in at 60, and that stop loss went up here, you would have made that $40. So that's kind of the idea between your how you enter, how you look at both the options chart, moving your options chart as this goes up, just finding periods where you think you're not going to get wicked out, but you're still kind of aggressive as you play. And obviously, NVIDIA traded pretty sideways today, relatively speaking, but you could have definitely taken some advantage of those $20 or $30 price actions. Another thing I wanted to talk to you all about is when you're deciding how many of these contracts to buy. So let's say you have a $5,000 account. Split it in half. Say $2,500. You should never play with more than half your account in the first place. And with that being said, you should never have more than 10% of that in the market at a time. So the most I'm really willing to risk is $250 at one time. So if I have a $5,000 account, half $2,500, 10% of that, $250. So I'm gonna put $250, whether it's all in this one or if I split it up with NVIDIA or Google or SPY, 250, that's my max. So if all three of them tank, the most I'm ever going to lose is $250. This is risk mitigation. That's rule number 1 and from my last video. But this will help you moving forward to not overload on some stocks. You think it's going to go way up, or it's going to shoot up or shoot way down if you're playing puts. You never really want to risk more than 10% of half of your account. That's how I play. I'll take 10% of that, and then most of my stop losses are 10% of that. So you're only risking the $25 per each of those plays. So if you're in 3 trades, 10%, you're looking at a max loss of $75 of your $5,000 account. And I'm looking for anywhere from 20 to 30% gain. But obviously, if you're reading the chart and it has some significant pullbacks, you're taking 10-15% gains, but you're also being pretty aggressive with your stop losses, so you're actually making a little bit of money. So the idea is risk management and be aggressive with your stop losses, because it's okay to make $1 or $2. What we want to avoid is losing money. It's pretty simply stated, but hard to execute when you're in the middle of a trade. If you have any questions on how I move my stop losses up, or I trade specifically with day trading, feel free to hit me up.